answer to Pierre's question is just cyber insurance, right? So that's our next conversation. If my panelists for the cyber insurance discussion, Jay, I met you earlier. It was fantastic. So folks, go ahead and come on up. And we'll get you guys mic'd up just over here. So while we do that, yeah. All right. So yeah, wonderful discussion there. I think, a lot of takeaways from that in terms of, prioritization, connecting, decisions about third-party risk to what the business is using the third party for. That comes up a lot with our work group that we have around third-party risk. Jay, are we missing some of, what's that? It's you so far, so. Do we have our other panelists here?
I'm going to improvise on this one then.
Yeah. All right, Nick's going to go. Oh, there we have Kelly. So we were just holding them outside until we were ready. Yeah, I think so. Jay, it was fun. It was interesting. So earlier, Jay approached me, and you were asking me about the cyber risk scenario taxonomy and kind of how you use it. So while folks are getting kind of up here, what was? Tell them what you kind of told me.
Okay, yeah. So I'm new to cyber insurance. I've started working for Mosaic Insurance about 8 months ago. Before that, I've always been in cybersecurity. So whenever I went to cyber conferences in the past, people would talk to me about cyber, and it was always really fun. Now that I work in insurance, I go to a conference and people don't talk to me. They complain at me about their cyber insurance policies and the challenges that they have with insurance and all the venting that comes with that. And so I kind of listened to them and tried to understand what their problems were with cyber insurance. And a lot of it came down to the questions they get asked by underwriters during underwriting meetings and how people assess and understand their risk exposure and how that then translates back to the cyber insurance policy. So I picked up the cyber risk scenarios taxonomy that FAIR came out with a couple of months ago, which helps you kind of form relationships between cybersecurity controls, threats, attack surfaces and assets, and then kind of, I think you called them like business impacts and primary and secondary losses, whereas I looked at it as insurance coverages. And so that relationship mapping basically helps me to translate and to talk to insurance buyers and CISOs about kind of effectively the same thing, how cybersecurity controls and investments in those controls is changing threat exposure and reducing threat exposure, but also the effects that has on insurance coverages, as well as help the underwriters to basically prioritize which questions they should ask in those underwriting meetings. So hopefully this time next year I'm not going to vent to that as much, but we'll see.
I told Jay, I said we need to do more on that, maybe have a webinar and talk about it. But I love when we can provide value to the cyber insurance community, because you all have provided a lot of value to what we do. So, and with that, I'm going to just turn it over to you all to have a discussion here about cyber insurance and what you're doing for the cybersecurity community. Thank you.
Brilliant. So thanks everyone for joining here today. So firstly, good afternoon. My name's Jay. I'm the CISO and Cyber Risk Engineering Lead for Mosaic Insurance. And we've got a panel here of 3 cyber insurance leaders who are going to talk to you about essentially what the insurance community is doing for the CISO to help kind of, box in kind of what the conversation is going to be about. There's really 2 critical areas that we're going to be discussing in this Q&A. The first one is the evolving role of the insurance community, really exploring how it's not just about helping the CISO office to recover from incidents and events when they happen, but actually actively partner with those organizations, help them to manage and reduce their exposures and build long-term resilience. And secondly, how cyber leaders can partner with the insurance communities and stakeholders to help them sharpen how they communicate risks back to the board, to really help you understand how to articulate and describe threat exposure and its technical concepts into a language that the business understands to then support and inform the kind of the data-informed decision-making that we were talking about earlier today. So I think, first thing I'll do is I'll ask the panel to introduce themselves and the role that they play within the insurance ecosystem. Should we start with yourself?
Yeah. I'm Nick Lang. I'm the class underwriter for cyber and technology at Antares. It effectively means I run the insurance underwriting around cybersecurity for the syndicate.
Hello, Kelly Butler. I head up the UK cyber practice at Marsh. We are a broker, not an insurer. So we help you procure cyber insurance if that is what you're looking to do.
Hi, everyone. Thomas Clayton, Head of Cyber Underwriting at Zurich in the UK. So we're generally speaking a primary insurer, which means that we take the first part of any claim and therefore particularly interested in the proposition elements of our car.
Brilliant. No, thanks for that. And so I guess just to kind of frame that into, so to make sure everyone else understands as well, what we're then saying is if a company wants to buy cyber insurance, they'll come to an insurance broker like Marsh, and then Marsh would help bring them to other insurance carriers like both yourself, Nick, and Tom, and you would then help work out kind of what risk you're taking on and how much of that risk you're going to take on. Is that fair to say? Brilliant. So I guess the first thing that I'd then like to do is just kind of frame the role of insurance and how it's changing as well. So could we just talk about how the role of cyber insurance has evolved over the last few years and really kind of the different ways that you see yourself helping CISOs frame cyber risk in terms of kind of what it means for the business? Tom, do you want to start off?
Yep, sure. So I think we've come to a few sort of realizations in this sort of area. I think firstly, we've come to realize that actually cyber insurers have a bit of a USP in this ecosystem. So we've got plenty of people in cyber who assess risk and assess the validity of and adequacy of controls. And we've got plenty of people in this ecosystem who handle incidents. We're actually, I think, one of the few people that do both at the same time. And therefore, if we can draw links between adequacy or inadequacy of controls and not only frequency of events, but also, with CRQ in mind, severity of events as well, then I think that there's a lot of value to be added back into the ecosystem at that point. I think so the second thing we've come to realize is that we've been doing CRQ for ages, we just weren't calling it CRQ. So cyber insurers in general, the only thing we can talk about is in pounds, dollars, pence, and cents. So everything else is irrelevant to us. That's the only thing that we can do. That's the only way in which we can pay out. It's the only way in which we can do our calculations of it internally. So we've always been used to converting that sort of, I suppose, entire ecosystem down to the granularity of pounds, dollars. And now I suppose all we're now starting to do is say, okay, well, there's some external value to some of the internal ways in which we've been thinking, as well as the insights we've been able to gather from that mass assessment and that mass claims handling as well.
Brilliant.
Yeah, and I think the data is something that has evolved significantly over time. I've been doing this for a very long time, and it just wasn't there 10 years ago, but we now have a significant amount of data. We know how these incidents unfold and the cost associated with them, so it's really important for us to bring that back to you and get that in your hands so you can prioritise your investment in cyber controls as well.
Yeah, I think that's pretty much covered it fairly well in the sense of we're a great aggregation point for the most effective controls that we've seen. And that's the greatest bit we can add back in terms of where we see risk mitigation as the most cost-effective element. Because we appreciate on an investment basis, you can't do everything at once. You've generally got to pick your battles. So for us, picking the most effective battles, hence why, 24 months ago, MFA was the silver bullet everybody was looking at. And what you'll find is there tends to be an evolution of controls. And the one thing we're really good at, because we see so many insureds on a daily basis, is how quickly we can aggregate that information quicker than others in terms of other bits. The other thing we can do is also provide some of our more long-standing analytical information, so in terms of event modeling, and we can put that back in, and we can provide you guys with better quantification on a projected basis, not just a realistic loss of happen to insured X or happen to insured Y. It's sort of a bit of a speculative assumption as well.
Brilliant, really appreciate that. And Tom, you mentioned something quite interesting. You said that insurance has always been doing CRQ, you just didn't necessarily always call it CRQ. And I think in the room here we've got a mix of people. Some people have been adopting FAIR and using it quite extensively. Some people are fairly new to it. Some people have tried it and maybe failed with it and just didn't really know how to scale it out properly. Are there any recommendations that you'd have from the insurance community around how others out here and anywhere else could actually start with CRQ and what they should try and get out of it?
Yeah, so I think, look, I'm not going to pretend to be a CRQ sort of, expert, certainly not in this room, right? Of anyway, maybe other rooms. But I guess all I can sort of do is sort of share some of the ways in which we've been approaching sort of CRQ as a basis of using it for what we use it for, so like attachment point strategies, say for example. So if I'm not entirely comfortable with the primary position on tower, I may well say, well, look, above 50 million, I sort of feel that I'm much more protected from a data breach scenario, for example. So those are the sort of ways in which we sort of use it ourselves. And so I guess the general approaches that we're taking are, firstly, be really scenario specific. So not all 7-day outages are created equal. Not all million PII breaches are created equal. The motivation and the acts of the threat actor really, really matter as the claim progresses. I think, secondly, really get to know and understand, from our perspective, what the processes of the business are that are really important, and how those processes take place, and how the organization actually earns their money. I think that's really, really key for us. And then I think if you start doing, and then thirdly, I think the importance of controls within this. So this doesn't just happen, and that controls can have a huge impact on that frequency and severity. So, for example, one thing we're really pushing at the moment is immutable backups. We really feel that has a huge sway on that risk quantification. And so I think when you combine that approach to CRQ with some of the data insights that we've been able to get from our claims and from our risk assessment, I do think that we're able to start putting a reasonable number on this. And I was reading the papers the other day, an article from a competitor of yours, again, I'm afraid, and they were guessing this before M&S came out with their number. They were putting a guesstimate as to what that number would be, and it was, I think he came up with 275 million pounds. That is spookily accurate and close to the.
I think it's about 300 million, wasn't
exactly.
it? Yeah. And Nick, you touched on this just a bit earlier in the previous answer, right, where you were talking about the type of data and insights that insurance has access to, and how that data could be useful to other communities and CISOs as well.
Yeah.
So I guess I'd just like to understand, because I imagine for a lot of CISOs, they don't necessarily know what they should engage with insurance for outside of insurance.
Yep.
So I guess in your opinion, what would good collaboration look like in practice between the CISO, the risk managers, the insurance buyers, and insurance stakeholders, insurers and brokers?
I think the important word there is collaboration. Insurers, Count Dracula is probably the best way to most people view us in terms of the evil, scary guy lurking in the corner that no one really wants to speak to. Dinner parties alone tell me that. Everybody sort of turns off after you tell them what you do for a living. But collaboration is the best thing. Insurers are uniquely inquisitive. We want to understand what you do, how you do it, and why you do it. The problem with insurance is the nature of how we collect information, in terms of it's either a proposal form, which is 100 pages long and binary questions. The best value there can be is the detail in between those questions, where it's a no and there's that little field that says other. Fill it in, provide the detail. And then a lot of the insurance we write, especially the sort of stuff Thomas writes on a primary basis, there are calls and there are presentations. For us, it's not necessarily about understanding the binary controls, it's understanding how you do things, how things are repeatable. So, for example, of 0-day vulnerabilities, we don't really care that the last one was patched within, 3 hours. We care that that 3-hour process is repeatable for the next one and the next one. We're more interested in the story and the detail of what makes you unique. And that, for me, on the basis of cyber insurance, it's why I've enjoyed doing it for so long, is the problem is the same. How do you keep data secure, safe, available, and reliable? Everybody has different architecture, everybody has different systems, and therefore everybody comes up with different solutions. There are different legacy issues, and it's that open conversation of what can we learn from you and what can we share back. My favorite bit of any client presentation is when clients ask, well, what's everybody else doing? Because us sharing what competitors are doing on a sort of non-proprietary basis is where the most value is, in terms of how everybody can improve, how everybody can improve, really.
Yeah, no, I would concur with those comments. It's around transparency, having a conversation, really being able to demonstrate the journey that you're on. No one's bulletproof, as we know, so where are you at? How is it cultivated within the culture of the whole organisation as well? It's good to have these controls, but are they implemented, and are they, mandatory within organisations as well? So really being able to demonstrate that helps insurers really prioritise you, and good risks are being rewarded in the insurance space at the moment.
But I think that's a relationship between the underwriter and the CISO has been on a hell of a journey over the last decade or so. I mean, when I first started this 10 or 12 years ago, buying cyber insurance to the CISO almost was this a professional insult, as it were. It was like, so you're essentially buying insurance against me failing in my job. I think they were leading the charge on the sort of, well, cyber never pays out sort of thing. Quite often you hear it from them. And they would say, well, look, don't go and invest in some cyber insurance. Give me the money, and I'll make you so secure you'll never need cyber insurance. Those things. And I think that's really changed from a relationship perspective over the last sort of 10 years. And I think CISOs are now some of the biggest advocates for buying cyber insurance. I think they realise it's not a zero-sum game anymore, that you can invest in cybersecurity and cyber insurance at the same time. They enjoy the safety net. And I think increasingly we can be seen as being an ally in going to the board and sort of urging for that investment. And we can be the independent third party who's seen his thousands of competitors and say, actually, you need to improve this. And best of all, you can get better terms as a result, so it starts to pay for itself.
Yeah, no, absolutely. And I think one of the things I've learned from kind of talking to people here today is I think a lot of people here are familiar with the idea that insurance policies come with instant response panels in the event of when there is a claim and there is that attack, there is support available to triage you and orchestrate those types of scenarios and those types of attacks. I think one of the things that people are less familiar with is the idea that insurance also proactively supports organizations as well and helps them establish that, understanding of what resilience looks like and how you get there. Could you maybe just paint a bit of color as to kind of what you do in your spaces around helping organizations proactively manage their exposures?
Kelly will probably speak far better on this in terms of the engagement from the broker side. But from a carrier side, it's every service from, we can provide tooling and sort of dashboards and everything you want. It's a virtual sweet shop at the moment in terms of what you can get from insurers. But some of the simplest things are probably some of the most effective in terms of the tabletop solutions, the instant response partners sitting down and getting everybody in a room to talk through it. Because one of the worst things about an insurance policy is it's a document that sits on the shelf until it's needed, at which point, have you worked out whether your phone systems operate via the network? How will you communicate? How will you gather everybody together? The real value is the fact that, as you say, the proactive nature of insurance has really changed. It's gone from being sort of reactive to offering pre-loss services and getting all the ducks in a row ahead of time, which I think is phenomenal from a carrier point of view because it helps with loss mitigation, and that's principally our zero-sum game is paying out as little as possible and making the risks as good as possible.
Yeah, and I again really agree with that. I think there was a perception that it was really prescriptive in terms of the services that came with the insurance policies. That has changed vastly. The insurers realise that you know your own business, you've got your own vendors in place, so they really want to work in partnership to say, okay, what do you have and what can we bring to the table as well for that safety net that Thomas spoke about. So it's really working with you, getting you as prepared as possible for an incident to happen. That's our sole focus at the moment. We've seen the good, the bad, the ugly now, and we know it's all about preparedness. And most people will tell us when we walk in the room, we've done our tabletop, we're okay. That's not okay, and I think everyone in this room would know that as well. So what can we do to help you? Be it with the insurers, partner on a tabletop and bring the insurance policy considerations into that tabletop, because I can't tell you the amount of phone calls I've got and said, I know we've got this insurance policy, I just don't know how to use it and my systems are down. So really embedding that within your incident response plans, and then when you do those simulations, who do you call? What are the decision trees in relation to that? I'll hand over to you. I'm really passionate about this piece of the pie in relation to that. So really it is, all I really want to stress is that it is a complementary to what you're already doing. It's not there to take over what you're doing.
Yeah, I think first and foremost, we're not doing that out of the kindness of our own heart. We're doing this because we think that spending a little bit of money, or rather frankly, giving you back a little bit of the money you've already given us, to improve your risk can have a really multiplicative sort of impact on our loss ratios. Yes, there are huge varieties of services out there. We picked just 3 actually because we think this are obviously the most impactful. So, instant response exercise, I think one of the most impactful things that you can possibly do, and bring the insurance into that is really important. A health check to be able to compare you to your peers and give you some hints and tips as to how to improve. And then increasingly CRQ. So for our sort of larger relationship customers, we're now paying for a CRQ exercise to take place in order to help you to talk to your board and say, look, the what-if analysis. If we were to bring this improvement in, it can have this impact on our exposure. I think the other thing we would be sort of remiss to not talk about is the incident response sort of aspect of this. So having a singular individual that you can talk to manage the incident from a vendor perspective, having a whole panel of vendors where you don't need to be paying a retainer, IT forensics, so PR, legal, credit monitoring, ransom negotiation. This all suddenly comes with a huge, it's I think quite underrated sort of thing, and it's hugely so beneficial and valuable.
Actually, I really appreciate that. That's really helpful. And one thing I'll add to this as well is that, back to the collaboration point, insurance is willing to listen to CISOs and to security leaders and help understand and tailor things back to what you're interested in as well. One of the examples I had recently is we were leading out incident response tabletop exercises with companies, and they came back and said, look, this is really helpful, but I'm also interested in understanding what the Security Operations Center is going to do as well, rather than just assuming they'll do the right things and then I have to make decisions off the back of it. And so we then went back and tailored a tabletop exercise around that as well and started designing that as well. So I'd just say, as much as insurance is out here proactively trying to identify the right cyber services to help you, make it a collaborative feedback channel. Feedback to us and tell us what you think is working and isn't working. And that's really going to help improve this as well. I'm going to ask you the awkward question now, the one that was right at the end. So there's going to be some CISOs out here and some other risk managers and security professionals who doubt the value of cyber insurance. We've all heard it. We've seen it. You said it. We're Count Dracula out here. Some people will have never bought cyber insurance. Some people may have bought it at one point and then stopped buying it. I guess given we're talking about how cyber insurance as a role has evolved over the last few years, what advice would you give back to the security professionals who have reservations about the value of cyber insurance?
My personal viewpoint is I don't know of a single insurance product that doesn't feel prohibitively expensive pre-loss. No one likes giving away money for something that doesn't do anything and sits on the shelf. But the value, as Thomas said earlier, the value of the policy when it comes to post-loss events, you're quite right. I remember the discussions with CISOs, and it used to be a case of, you think I'm doing my job badly, I can invest money better. It's not protecting your reputation, it's protecting the roles and availability of jobs within the company for everybody there. It's not just it's sort of an affront to saying you're not doing it well. It's more a case of ensuring that you can continue to do it and continue to trade over the years. If we look at M&S, you brought up an example, 275 million will pale in comparison to the premium that was paid for the limits that were purchased. And in addition to that, where insurance has evolved over the years with proactive services, with proactive engagement, with risk quantification, with brokers now helping you with peer benchmarking in terms of how much you buy, in terms of evaluating your threat, because we see so much risk in terms of identifying what the key threat vectors are to you, may not be something that's acutely obvious to you, but it might be to your peers, and there will help be a realignment. My view on insurance is it's invaluable for the best purchase you'll hopefully never use is the best way I like to look at it. It's that continuity of operation. So I'm a big advocate. Some of the losses we paid out have always come from the freak outside, and the best thing about cyber insurance is it's a constantly evolving policy. It's not a fixed asset like a property policy where it covers one thing and that's it, and that's all it will ever cover. As technology changes with AI, with cryptocurrency, all these emerging threats are being incorporated into changing of encryption standards and sort of quantum computing. It's all looking to how to incorporate that. It covers everything from extortion, from ransomware, from your own accidents, errors, and omissions that pull the network down, to your own media coverage in some examples. It's such a broad spectrum policy. My personal view is it's incredibly interesting what it doesn't cover and how long it won't cover that element for.
That was very passionate.
Really interesting.
And not too much to add to that. It's a really effective risk management tool in a suite of everything else that you're doing as well. So it is a really effective risk transfer off your balance sheet as well. It's been around long enough now. It's tried, it's tested, it pays claims, it's there when you need it. That's what I would add there.
I think the value is inherent in the claims that we are paying out. I was actually in your office, Kelly, talking to a German customer of ours the other day, and I walked them through the last 50 million of claims that we've paid out recently on an anonymized basis, just saying, look, what happened and how do we react? And I think that that's the best demonstration of the value that we can bring. And those are, I think it's about 6 or 7 customers, and they're customers who were able to give comfort to their stakeholders and say, we're going to survive this, we're going to be able to continue paying our employers, continue paying our supply chain, we're going to live to fight another day. We have a choice as to whether to pay a ransom demand or not, because we have insurance in place to help us with the outcomes if we don't. And we have experts to help us get it through this and recover better.
Well, I'm going to take a question, Jay.
Yeah, I was going to say, we're at time, but can we pass out to questions?
Yeah, here. We'll go there and then...
So just going back to, I think, a point around looking at controls presence in assessing premiums when you're engaging with the customer and trying to try to price them. To what extent do you look at control performance as opposed to just saying, yep, you've got a DLP, you've got immutable backups and so on? The actual performance of those controls, the deployment of them, the coverage of them, the features of those, and their ability to either, support the avoidance of a threat or, improve the susceptibility and resistance strength, post-compromise.
To be fair, that's where the collaboration really becomes the differentiator, and that's the bit that will affect your premiums more than the binary yes, no. So the more detail you can provide and the more rationale, no control is perfect. So the more information we understand about how it's implemented, that's where we gain the comfort.
I think that's the difference between a customer that's just filling out a proposal form, which unfortunately is relatively binary because it's a yes, no answer, compared to a customer who invites us into a conversation in which we can really have a Q&A and dig into the detail and understand that and understand their general approach to it. But I think you're absolutely right. And take cloud configuration, so for example, hugely, hugely important right now. So just understanding, do you have MFA for access into the cloud, pales into comparison with actually how are you configuring the security controls that are present and then available to you in the cloud.
If I might just add one more thing to that as well. So as part of my risk engineering lead role, this one of the things I need to basically try and work out how to tackle as well. And one of the things that we do at Mosaic is we partner with Safe Security, who is represented here, and we effectively use Safe Security to give us that confidence and that understanding of not just whether a control exists, but how effective that control is in terms of does the control have sufficient coverage? Is it accurately and relevantly designed against the threats that we're trying to mitigate against, things like that. And for us, and I think I can speak for all of us actually, it's not just for Mosaic, but for all of us, the idea is that the increased confidence that we have that the controls are working both at a perimeter and internally if we have an assumed breach scenario, that increased confidence translates back into reduced premiums.
Okay. I understand the insurers you will have good historic data as to your customers' control posture or security posture and which plans you've had to pay out on. But how confident are you that the threat landscape is sufficiently stable that that's useful indicators of the future? And how much, assuming you pad the premiums to to account the fact that the future's changing very quickly, how much extra do we have to pay? And I've run out of sentence, but you get the idea.
Yes, it's a good question. How do you sleep at night, Thomas?
Okay, so I think to your question, are we funding for the future threat landscape? Given that a policy lasts 365 days and everything that can change in that, I think to some extent, yes, because we all have cat loading for catastrophic events, the 1 in 200-year events, so that should be within our pricing. But I don't think any of us can really predict where it's going to go within 365 days and whether that's going to be sufficient. And I think that's the good thing about a market, is that market pricing changes depending on the landscape that is presented to us. I think it'd be wrong for us to have an additional margin for the unknown and the unforeseeable. But as we saw when ransomware really sort of took off in sort of 2020, 2021, the market did prove itself incredibly adept at very swiftly identifying, right, what are the really important things here, and really starting to draw new red lines in terms of our approach of what's acceptable risk versus non-acceptable risk.
And I will add, as our role as broker is to hold them accountable to that, for it to make sense to you as customers as well.
I think the only thing I can add to that is, on Thomas's point, the risk selection is really the key factor for insurers. And as risk selection has improved because underlying base controls have improved, as geopolitically the world has kind of hit the skids a little, premiums have never been as cheap over the last couple of years. So whilst instability increases, pricing has gone down because risk selection and risk controls have improved. And that's because of the constant feedback and the constant focus on what matters most, because it's a targeted approach to risk selection and control maturity for us.
All right. Thank you all.
Yep.
This was great.
Brilliant.
Thank you very much.
Thank you.